Hello, this is Sam Fleming coming to you from the European Commission and today's online live tax event about tax policy here in Europe and globally. This is all about tax fairness in the recovery and long-term growth. It's a great delight to be here and to join you with two excellent panels coming up over the next couple of hours. Before we do get into the agenda and the debate, I'd love to ask you, the audience, some of your views. So we have on the screen, hopefully now, a question for you, the audience, to get your feedback on some of the issues that we'll be discussing today. The specific question, please go on to Slido if you'd like to respond to it, is what concrete measures do you think are needed for taxation to support European growth in the post-COVID era? Please do go ahead and give us your feedback on that. Meanwhile, I'd like to introduce our excellent panel. First of all, joining me here in the studio is Paolo Gentiloni.
Good afternoon.
Good afternoon, Commissioner. Paolo Gentiloni is the European Union's Commissioner for the Economy. Via Berlin, we have Olaf Scholz, Germany's Finance Minister. And joining us from Milan, we have Irene Tinagli, who's the Chair of the European Parliament's Econ Committee. Great to have all three of you with us here today. Let's start the debate with an overview, really, of where we stand. I mean, this is an incredibly important moment for tax policy globally. There's a real drive to get corporations to pay their fair share, huge pressure on public finances around the world as the COVID recession hits hard, and so a sense that really tax fairness is going to be one of the key driving points on the agenda for us. Let me start with you, Commissioner. Could you give us a sense of what the European Union's particular priorities are for tax policy as member states try and escape from the economic damage of COVID-19?
Yes, indeed, I think that tax policies can give a strong contribution to our recovery. We know how uncertain the situation still is, and this is one of the reasons. Fairness, but also new tax policies, new own resources, as we call them here in Brussels, are extremely important. Why? Because we decided something unprecedented in the last months. This huge next generation EU recovery plan, and first of all we have to repay these funds with new own resources, and this I think is the first contribution you have to give. There is a political momentum among member states in the European Parliament. I know that the German presidency is very much committed on this, and so the Commission is asked to present our proposal next year in the first semester of these new own resources, and have most of them in places in 2023. As you know, we are requested to begin repayment of this recovery fund beginning from 2026. But there are other reasons, not only repayment of this big fund, because a fair taxation system can contribute to modify our societies and our model of societies to make it more sustainable. And we have a lot to discuss on energy and carbon border mechanism connected to the green transition, and because of the fact that the big winners of the crisis we have in the last weeks, so the big tech platforms, the digital platforms, need to address the issue of a fairer system of taxation. And finally, because in general, for the well-being of our economy and our recovery, we need to have a system facilitating business and fighting fraud more effectively. So plenty of reasons to say that it's in a certain sense now or never, or we are able now with this political momentum to introduce new own resources to make our system fairer, or it will be much more difficult to do it in five years from now. It is now.
Let me turn to Berlin and Olaf Scholz. Minister, tell us about Germany holds the rotating EU presidency right now. Give us a sense of the German presidency's priorities when it comes to driving this agenda of tax fairness. Minister, can you hear us?
I can hear you. Very good.
Great to hear you.
Yeah, thank you. First, let me underline what Commissioner Gentiloni said already. There will be a very important agenda which is linked to the recovery program, and we need a lot of activities which makes it feasible that we will be able to pay back the debt. And this is the question of own resources, which will be a main topic of European agenda in the next years, and I'm very happy that we could work very hard in the starting moment for this debate, and the necessities for taking a decision are as strong as they never were before. If we remember, there is a long debate on own resources in Europe for a long decade now, but at this time there is a need for a decision, and this is why it will come. This is what I hope. The second is we are working very hard on two questions which are important in the international agenda discussing about tax fairness. One is the debate about minimum taxation on the global level. This has an impact on the way how we tax corporates globally, and it looks very much that we will have a blueprint in this question, which is mostly a consensus between the nations working in this field at the OECD. And if this is so, we could work very hard to implement it on the international agenda, but also on the European agenda. And this is one of the topics we will work on very hard as presidency. The same is so with the discussion about how to tax digital corporates. The Commissioner already mentioned that there is something which could be not called fair. They are the winners of revenues during the crisis. The companies are very successful because of all the need for video conferences and so on. Because of this, I think it is absolutely fair that we now make the necessary progress in this question. We will have a blueprint in the OECD on this question as well, but we can see that at this stage we have a lot of dissenting aspects within the debate still. And so I think it's absolutely necessary that we make more progress so that we avoid a conflict on this question without having a solution. My view is that we should make as many progress during this year as feasible so that the decisions could be taken in the beginning of the next year.
Just to quickly follow up on the own resources question and digital in particular, Minister, do you see the question of the digital tax, if that does indeed come to an EU level, do you see that as a feasible own resource, or do you think that's a question more for member states? Because the revenue from a digital tax is relatively modest, as I understand it, when it comes to its potential contribution to own resources.
It is a question of fairness when we discuss about how to tax the big digital corporates. It is not the contribution coming from them, because anyone knows there will be some, but it is not the biggest we could get. Minimum taxation is much more effective in the looking at revenues. But nevertheless, there is a need for a consensus in this question. I see that there is a dissent we have with the United States on this question, but anyone should underline that there is no solution that could be no consensus. And this is why I hope that we will have it in the end. It's quite difficult, but we have to work on it.
Let me turn to Milan and Irene Tinagli from the Econ Committee of the European Parliament. I would love to get a sense of the European Parliament's perspective on the agenda of tax fairness, and whether the Parliament and your committee feel that this agenda is being driven hard enough by both the Commission and the Council.
Well, Parliament has always been very keen on pushing taxation, fair taxation in the agenda. We voted a fair taxation resolution last December, in December 2019, which was voted with a large majority. We have just established a tax subcommittee within the Econ Committee, which will be, will start this week and will be devoted exclusively to discuss tax issues. So this just to give you an idea how important, how relevant this topic is for the Parliament and how it is, I think, for the citizens. European citizens want to see a greater incisiveness in the policies, in the fiscal policies, especially in re-establishing fairness, as Minister Scholz said, and creating how can I say, fiscal policies that are more suited and fit for the digital age, for the globalization. So we can't think. We are, working, operating in a global digital market, and of course the fragmentation in the fiscal policies and all the national different systems gives too much room for tax fraud, tax elusion. We need to re-establish a level playing field. I mean, for fairness and to also make the single market function better. So, absolutely, Parliament is on it. I think that the Commission is moving in the right direction. We really, very much welcomed the package that was advanced in July. So we will wait for the next steps. We had a good conversation with the presidency, so I'm sure that, as Minister said, the German presidency will push on this. I have to say, sometimes we were a little bit disappointed by the pace in the Council was not, let's say, as fast as the Parliament would have liked to see. But I think this is the time in which all of us realize that it's time for us to find an agreement, because the pandemic crisis, the recovery that needs a big effort on the side of everyone. And I'm sure that the ministers and the Council will see that need as well.
Let me just quickly come back to you. You said the pace on the Council is not what you'd like to see. Do you have any particular areas where you really want to see faster progress now in the coming weeks and months?
For me? Okay, I'm sorry. There is a lag, and then sometimes I'm not sure who you are addressing the question. Well, there are many issues. For sure, we want to push the issue of transparencies. We are working on DAC 7. I think that transparency, cooperation, exchange of data and information is a first fundamental step, and I'm sure that we can move fast on this. And then, we would like to see the Parliament asked to see a European proposal on digital taxation in case the international negotiations at the OECD level do not deliver any outcome before the end of the year. We would like to see a proposal coming from the European Commission for the European Union. So these are probably two of the most relevant hot topics, but there are many others. I mean, we can talk a lot about that. So, but definitely, I think it's a very good starting point, the one the Commission started from, with the transparency, exchange of information, fighting fraud. Honestly, we would like to see corporate CCCTB, common consolidated corporate tax base, to move forward, and also we would also like to see country by country reports to move forward. So, but as I said, there are many things.
Thank you. Commissioner, let me turn it back to you. And indeed, the whole question of cracking down on fraud and evasion and cooperation between authorities. The Commission unveiled quite a large package back in July, which aimed to deal with some of these questions, reform of the Code of Conduct when it comes to business taxation, but also better exchanges of information, uses of information more effectively between tax authorities. Give us a sense of where the Commission thinks this can actually push things when it comes to improving the current situation.
Well, I think the experience shows us that if you are dealing with tax fraud and transparency, we don't have, in fact, a single silver bullet to solve the problem. We have two key words. One is cooperation among member states and fiscal administration and customs. And the second key word is technological improvement, digitization. We saw in the last years, both at G20 level internationally and at the level of the European Union, a lot of progress thanks to these two keywords, cooperation and digitization. So our action plan is now trying to improve this on a certain number of issues, from the carousel fraud to the Code of Conduct on business taxation, to the cooperation for digital sellers, our new directive for sellers in digital platforms. 25 different measures, maybe very technical in some way, but I think that if we are serious in making progress in all of this, we can have substantial revenues. The VAT gap that we recently, 1 week ago, described for the year 2018, it is the last one that we are having calculation on, is very high, 140 billion euros. So there is room to strong improvements. I'm not saying that this is more important than other form of new taxation, because as Olaf Scholz was saying, for example, the digital taxation is a political duty that we have. Despite the fact that we all know that we will not have billions and billions coming from this digital taxation. We can have billions coming from a more effective management of fight towards tax fraud. And I will also present next month the plan for what we call the next level of our custom unions, which is also very important. A little bit costly because we are strengthening the digitization of our custom system, but it is one of the most promising projects from this point of view.
Tell me more about that last point. What do you think you can actually do to strengthen the customs?
It's technological improvement and digitization of our common system, because to be quick to react to digital fraud is extremely important now. So transparency and technological evolution are absolutely fundamental, and cooperation among member states. I am confident that this could have for us important revenues in the near future.
Let me turn it to Olaf Scholz in Berlin. Give us again the sense of the German presidency's priorities when it comes to the question of simplification, but also cracking down on evasion. And I wondered, Minister, also if you could specifically address the question of country-by-country reporting. This is obviously an important initiative that's been around for a while, the idea of getting big multinationals to reveal more about what they're paying and earning. And yet this has been blocked in the Council. Perhaps you could give us a sense of how hard you think the German presidency could push this agenda forward.
Thank you. First, country-by-country reporting is already a big success story. We should remember that we had a situation where there was nothing like this. Now we have a lot of agreements with a lot of nations about country-by-country reporting. The authorities get the information. There is a big exchange which we already have and which helps us very much to fight against tax fraud and all the things that are linked to that. The question we are discussing now is public country-by-country reporting, so that alongside to the public authorities, also the public can get informed about this important informations, with the idea that this will help to fight against all the strategies against paying taxes. And I think it's a quite difficult question because there are different views on this on this aspect, but it looks that a big majority of countries will support it. We are not there yet, but to my point of view, it is something that will be on the agenda of the decision-making processes quite soon. And if the majority is as it looks like, we will have a decision. But this is something which depends on many obstacles that might come up. But there is something which looks like a development into this direction.
Minister, would Germany be supportive of a breakthrough before the end of its presidency on this? Do you think that could be achievable?
The presidency is supportive for a decision-making process. As you know, the German government has two different views on the question. So as a government, we will have not a common view on the question, but being the presidency, we will support any debate and a decision-making process. And this is what we are looking at now.
You heard, Minister, from Paolo Gentiloni in terms of the July package, in particular the question of the reform of the Code of Conduct on business taxation. What kind of measures do you see in terms of improving that Code of Conduct and allowing this peer review process when it comes to taxation and aggressive tax practices to become more effective? Minister, that was addressed. Minister, that question was meant to be addressed to you. It was a question about the peer review pressure, the peer review process, and the Code of Conduct on business taxation. I wondered what further steps you'd like to see on that front beyond the July package from the Commission.
So I haven't realized that this was a question to me. I thought it was a question to the Commissioner, and possibly he would be the right address for your question. We will support the Commission in the work.
Okay. I did want to now turn to Irene Tinagli and the question of this broader issue of a race to the bottom. This is something that concerns the public greatly, obviously, around the world, the sense of tax competition and aggressive tax policies, not only globally, but also between member states. I wondered if we focus on tax competition between member states, is the balance right in terms of this? Is it getting too aggressive, or is it beyond tax competition now and becoming more aggressive? And what kind of priorities would you like to see the Commission and the Council execute when it comes to this?
Yeah. I couldn't hear very well, but I got the question. So it's about tax competition and where is the fine line between healthy tax competition and too much of that aggressive tax policies. Of course, it's not. Sometimes it's not so easy to draw the line, but I think it's quite evident that in our case. We do have a system that is full of asymmetries of information, that gives too much room for certain players to use the system at their own advantage, and for some countries to use these asymmetries and this fragmentation in the market to carry on a competition that actually damages some other actors and some other states. So I think it's it's fundamental right now to create the conditions to re-establish a level playing field within the single market, within the European Union, that allows, those businesses, for example, or citizens that do not have the possibility to use the system and the weaknesses of the system at their own advantage, to feel that they are not subject of unfair competition, to intervene to not allow this aggressive tax planning that actually is draining massive resources from some member states and creates also a sense of frustration in many citizens. So I think that, of course, it's fair that member states want to retain, their own national fiscal policies, their own national authorities, but there has to be a minimum level of, cooperation, a minimum level of rules that preserve this level playing field. And on this front, I think as some things that I mentioned, like the CCB. Oh, sorry, I don't want to use acronyms. It's the Common Consolidated Corporate Tax Base. This is an important step. Which is also part of the negotiations that we are having also at an international level, but I think we can do something at the European level, as we mentioned earlier. Also, the Commissioner Gentiloni already mentioned strengthening cooperation and transparency, flow of information, also helps a lot. Probably is not perceived from many citizens because it's very technical, so sometimes it's not perceived as an instrument that really can re-establish fairness and grant more resources to the Union and to the countries, but actually it is an important fundamental instrument. So all these are things along with what we mentioned, like the digital tax, but it's also been mentioned that digital tax maybe it's not an amazing source of billions as many would think, but it is a way of re-establishing fairness and a level playing field between different players in the market. So these are some of the instruments. We can, of course, discuss more, but these are the ones that we've been discussing in depth in these months in Parliament as well in the Commission, and where the citizens are waiting some strong signals.
Olaf Scholz, could I ask you, how do you draw the line, this red line between what constitutes healthy tax competition and what is of an aggressive nature and needs to be taken seriously at a European, indeed global level?
First, there has been a lot of progress in the past on the international level and also on the European level in this anti-BEPS activities which have taken place in the past. I think they were quite successful, and this is encouraging for the future because we should continue on this path to be more effective as we are already. The second is, I think we need some new measures against tax competition also within the European Union. And when we discuss in the OECD level about the question of minimum taxation, this will have an impact on the European debate as well. If we are successful in agreeing on something which is a way of minimum taxation in the global level, it will mean that we will have the same regulation within the EU, and I very much hope that we will be successful with this. So it is one of the important questions. Let me just underline that, for instance, a question like the banking union, which is absolutely necessary for create more growth in Europe, is very much linked to that question. If we open all the different markets for the banks more easily as they are open today, this has an impact. There could be nothing like tax competition, which makes it easier to go to a country where you pay less taxes, but competing from there without nothing which has an impact on the business model that you are following. So I think when we want to be successful with this necessary reform on the banking union, we also need to be successful in the question of minimum taxation and the fight against all the ways of base erosion and profit shifting within and without the European Union. The common corporate tax base is a question that has been discussed for a long time. As you know, France and Germany made a new proposal in this field, which we hoped could be useful for the further debate, because this is also one of the fields where we need more progress than in the past.
Thank you very much. We do have some audience questions which I'd like to refer to our panel in to the short amount of time we have left to us. Indeed, I'll refer the first question to you, Olaf Scholz, if I may. We've had several questions really on this question of own resources, which Paolo Gentiloni referred to earlier, and as did other speakers, this question of whether new forms of revenue need to be found in order to allow the Commission to pay back these large borrowings that it's undertaking as part of the recovery fund. The reality, of course, is that all of these potential own resources are very, very difficult to get past with unanimous consent of the member states. And so I wondered if you could give us a sense of which you think are the most achievable in terms of own resource options, and which indeed you think Germany is most willing or most able to support to try and reach to fruition.
So I think that there is some pressure coming from the decision on having a European debt which should be paid back. Because of this, there is a need for a decision. So I'm quite optimistic that, different to the past, we will have the progress we are looking for so many years. And because of this, I'm really confident about the decision makings. The Council included in its proposal a lot of possible own resources, emission trade income, especially looking at seafaring and airlines. There is the question of the border adjustment mechanism, which has to be tackled. There is the so-called plastic tax, which is very easy to implement because it's not a tax. It's just a revenue from the budgets of the member states. But in the end, it will happen, I think, very soon. And then we have the discussion about the two topics we already debated here. This is the digital taxation and the question of financial transaction taxes. So these are the most promising ideas, and we organized to have a very intense debate within the finance ministers group when we assembled in Berlin last week, and it was really a very promising debate because anyone understood that decisions will have to be taken and that it is not the time for waiting for nothing to happen.
Let me refer the same question to Irene Tinagli, and in particular in the context of the discussions now going on with the Council in the political dialogue over the multi-annual financial framework. This is something that's been a priority for the Parliament, I believe, the idea of getting own resources on the table and making sure that Europe has the means to pay back what it's borrowed. Do you sense that there's a real appetite to get this through, or do you think divisions between member states will prevent it from being possible?
Well, in Parliament, this is a huge concern. I mean, that we need more own resources, not only to pay back, of course, to repay this debt that we are creating to support the recovery, but also to protect, maintain, and possibly expand all the programs that we support with the MFF, with the European Union, cohesion, research, innovation, So the risk that we need to see right now immediately is that if we don't add up new resources, new own resources for the European Union to make it stronger, to make it able to repay this new debt, what will happen is that we will end up destroying everything we've built so far in terms of cohesion, in terms of programs, in terms of support to the European citizen and Erasmus, innovation. So this is a big concern. So I think we've made a huge step forward in these months, showing the solidarity, showing what the European Union is really about, how much we care about protecting our citizens. But now we can't stop here. So these decisions, these historic decisions, need to have consequences also for the long term, and show that this willingness and this openness that we showed in these months have also a reflection on how we approach our budget and how we approach the future years to come. So and all the sources that Minister Scholz mentioned are important sources. I would like to stress especially carbon border. That is particularly relevant as we want to move and to have this green transition, and we need to do it in a way that is, how can I say, our industry is not damaged from what comes from outside the European Union while we ask them to do this transition. So we are asking the industry to make an extra effort, also member states, the European Union, we are all making extra efforts in making this transition, but we need to make sure that our industry doesn't suffer too much competition from outside the borders. So carbon border taxation is something that would help us also doing this transition. So, but this is just one thing, just to realize how these different voices are not only sources of income or resources for us, but are also means to correct certain distortions or to support our objectives in the long run.
Thanks very much. Let me refer the issue to you, Paolo Gentiloni. During the meetings of finance ministers which you attended in Berlin, you received a presentation, I think, on the options for own resources. And the most viable option was seen as to be the emissions trading scheme, an expansion of the emissions trading scheme in terms of the revenue it would raise. Of course, expanding it has its own challenges, is very divisive amongst member states, as we've been discussing. In particular, one of the expansions people talk about is to aviation. The aviation industry is on its knees. Is it plausible to generate the kind of money that you need through the emissions trading scheme and generate also the support of all member states in order for this to actually happen?
I think it is feasible. Of course, we need to do this in the right timing, because we are not unaware of the situation involving some sectors, aviation, for example. And of course, we need to build consensus, because and this has always been on taxation a challenge for the European Union. We have a story of difficulties also, and not only of success. But now I think we have the conditions, the political conditions, and I would say also the public opinion conditions to try this breakthrough. The Commission is not only tasked to make proposals, but also to work with the Council and with the Parliament to try these proposals having success and consensus. Because, if we only make proposals, we could do this for the next period very, not easily, but rather easily, and then without success. I was encouraged by the discussion in Berlin, because it was an informal discussion, but I didn't see countries slamming doors in a preventive way. So the discussion is open, but I think it is possible. Of course, we need to address also the issue of tax aggressive planning. Here, a global agreement on this that we call Pillar 2 in the discussion on OECD could help, as Olaf Scholz said before, because with a global agreement we could have an easier implementation way that with a new proposal from the Commission. But we know that without agreements at global level, the Commission is committed to come with our own proposals. And then we have the challenge, I think, of combining the ETS changes with this new carbon border adjustment mechanism, technically and also internationally, from the international trade point of view, a not easy issue. We have to work on this very seriously. We have an impact assessment underway. We will conclude it at the end of October. At the end of this impact assessment, we will begin to consult with the presidency and with member states to understand the way forward, and we will present a proposal in June next year. Someone could say, well, it's too late, June next year. But, well, we have to begin repaying the debt in 2026. We are sure that we can be able to put in place these proposals before. Our commitment is for 2023 for the carbon border adjustment tax. But it is not already there, and we only put it on the table. And then we have to address also the issue, as I said, of aggressive tax planning, not only with the minimal taxation, but also through the tools that we have. Also, the Recovery and the Resilience Facility, being connected to the country recommendation, will be connected to this issue. We will address in countries where country recommendations are dealing with tax aggressive planning, we will ask to member states to address this through the reforms using the Recovery and Resilience Facility, because we have to, I think, we need step forward in this field, and the semester and the Recovery and Resilience Facility are strong tools to address this issue of tax aggressive planning.
Thank you very much indeed. I wanted to thank my panelists for an excellent discussion. Firstly, Finance Minister Olaf Scholz joining us in the studio from Berlin. We also had Irene Tinagli joining us from Milano. And here in the studio, Paolo Gentiloni, Economics Commissioner. An excellent panel and a really fascinating debate. This debate also tees up a second panel we have coming up in a few minutes. Before that, we have some voices on the issues of tax, which we've been discussing here today, and also we'll be discussing some of the responses that you had to the question we posed right at the beginning of the panel. But please stay with us, and we'll be back with you shortly.
How could tax help recovery in the long term? Well, first, by not raising taxes too quickly. We need to be very cautious, we need to be patient, the pandemic is still around, the risks are looming, and what is important is the stimulus, is recovery. And tax should be used to help workers, to help all the players in the economy to make sure that we have recovery, which will be the best way to pay the debt back. Now, in the longer term, I think the crisis is an opportunity to adapt the tax system to the new realities. What are the new realities? Capital income plays a bigger role than ever in the economy. Better tax capital should be the answer. We are at the digital age. We'll have to address the tax challenges of the digitalization of the economy, which may go beyond pure digital companies. And finally, and of course, we have the challenge of greening the economy, and the price of carbon will be absolutely key there. There are ETS systems, but we should also play with taxes. So greening the economy will be an answer for the long term. Short term, stimulus; longer term, fundamental adaptation of the tax system.
Let us learn from the past. Let us learn from the last crisis. This crisis around, let us not cut public expenditure and raise the tax bill for the middle class. No, government should sustain the demand in the short run and make sure that the bill of the recovery is picked up by those that can afford it and don't pay their taxes now. That means the biggest polluters, the large corporations, and of course the wealthy Europeans.
The main tax responses must be based on simplification, digitalization and harmonization. We have to simplify tax rules and procedures in order to reduce administrative burdens for companies and unjustified burdens for citizens. We have to modernize our tax systems and reform the VAT rules in line with the challenges that come with digitalization. Finally, we have to continue to harmonize national rules to promote fair competition and combat fraud in a more efficient way.
COVID-19 is having and will have a huge impact on the economy. It is time to help the industry and the employees, and this is being very costly in terms of public finance.
The tax response to the pandemic should be based on 3 pillars. First, we need excessive profits taxes on those multinationals that have reaped extraordinary profits during the hardship of many. These profits have to be calculated as a share of the global profits and not on some fantasy figures declared by local subsidiaries. We need, second, a wealth tax to make sure that the broadest shoulders contribute.
In times of economic recovery, imposing new taxes and compliance costs that goes along, it's not a good idea. Instead, the focus should be on taxes that previously haven't been collected. First of all, VAT and customs duties on goods coming from third countries.
We do believe that the priority should be to implement as soon as possible any tax credit, tax regime which can help to reboot the production and accelerate the transition on a green business at the level of the European Union, such as R&D tax credits, tax innovation, specific tax regime on patents.
In the crisis, we support business cash flow and employment through accelerated refunds, wage supports and targeted relief. We will facilitate recovery through debt warehousing and realistic repayment schedules. But this is dependent on correct tax returns to ensure that short-term measures do not compromise core compliance in the longer term.
It's necessary to set out new policies in order to support demand and deal with the future challenge of climate change and digitalization. Taxation should be able to direct private investment to those priorities through, for instance, permanent tax reliefs, tax credits and a quicker refund systems.
We urge governments to do their part in stimulating demand by introducing cash and tax incentives to boost travel and tourism.
To assure long-term recovery of the European Union and the Member States, I firmly believe that it is essential to increase trust in the institutions, the EU and the Member States jointly.
First, we must help businesses and citizens to get fast and relevant information based on their needs and through channels they prefer.
We should reward honest taxpayers, we should grant benefits to them, and we could invite them to be part in a committee which advises the government on tax policies, tax collection, tax administration, tax spending. And the membership in this committee should be very prestigious.
Europe has done a great job in mobilizing billions to face the COVID-19 emergency. It is critical now that the recovery is not paid by austerity and cuts in public services.
We need to keep combating unfair tax competition between the Member States and to ensure that every taxpayer, every business and every individual pays their fair share.
The overall tax policy should be such that the honest taxpayer is the one who is better off.
First of all, we need a European border. That means that if profits are shifted in the form of dividends, royalty payments, of interest outside the EU to low-tax third countries, they are taxed upon departure. The second thing what we need is an effective minimum corporate tax rate so that the big corporates pay their fair share to society.
It means that be sure that each company which are doing business in Europe are paying the right amount of tax, and be sure that everybody is paying the same level of tax to have a fair competition between each business. And
we need third, transparency to underpin these measures by having public country-by-country reporting voted under the German EU presidency and by ensuring public statistics on automatic information exchange.
We should focus on bad tax jurisdictions within Europe, so of other European member countries, and not on outside or third-party countries, to avoid the perception that European member states are hypocrites.
The EU must stop harmful tax competition. This deprives countries in the EU and the Global South of resources to fund the recovery and essential public services.
Having said that, I think we should focus on the code of conduct. We should try to make it publicly known, broadly discussed, and maybe at a later stage also link specific benefits to countries or businesses which comply to this code of conduct.
The EU should make the fight against tax haven in the EU more effective, should review the criteria of the EU tax haven list, and should update the Code of Conduct for business taxation.
In order to do so from a tax perspective, we need to keep combating unfair tax competition between the member states and to ensure that every taxpayer, every business and every individual pays their fair share.
We need instead a fairer taxation. We need that those that can afford it contribute more. This means taxing the most profitable corporation, taxing speculative financial products and taxing pollution.
We need excess profits taxes, a wealth tax and public transparency on those measures to rebuild trust and confidence of honest and compliant taxpayers that others are meeting their obligations too.
We welcome the intention of the European Commission to modernize the tax system and lower the burden, especially for companies that run their activities cross-border. For a healthy economy, fair and predictable tax system is essential.
The action plan presented by the Commission is a refreshing roadmap for the next 2 or 3 years.
The pandemic should not prevent progress. Now is the time as businesses recover and reassess their operations to proceed with digitalisation.
It's necessary to set out new policies in order to support demand and deal with the future challenge of climate change and digitalization. Taxation should be able to direct private investment to those priorities through, for instance, permanent tax reliefs, tax credits and a quicker refund systems.
The top priorities of the European Union should be to increase tax cooperation between authorities within the member states and third countries by, of course, making use of new technologies such as data analytics and data sharing.
We should strive to achieve tax certainty and work against unfair competition.
We must tackle tax evasion across all business models. We must make the effort to find global solutions to global challenges.
Welcome back. It's great to be back. Great to have our second panel with us today to continue the debate about what is needed to create a fairer tax system both here in Europe and globally. Before we get on to the debate, I would like to refer you to the responses that you, the listeners, have been giving, viewers and listeners, have been giving us to our question, which we set earlier. So we asked what concrete measures are needed for taxation to support EU growth in the post-COVID era. Far and away the biggest response, really, in terms of percentage, was for greater simplification of tax rules. And so maybe that's something that we could discuss in our panel today. But also a lot of interest amongst the viewers in green measures, so green and smart investment taxation measures which will really turbocharge this green transition that everyone's working towards at the moment in the European Union, and also an expression of desire for greater solidarity. This, I think, goes back to what we were talking about in the first panel, this idea that in this huge pressure, this period of huge pressure on the public finances around the world, there's a desire in populations to see everyone sharing the burden of paying back the enormous amounts of debt that will be taken on to pay for this recovery. So one of the examples is wealth taxes in order to allow that to happen. But all this is good food for thought for our panel. Let me introduce, first of all, the panel. We're first of all introduced by Benjamin Angel, who's the Director for Direct Taxation and Tax Coordination at the Commission's Directorate General for Taxation and the Customs Union. Tove Maria Riding heads the Tax Justice Team at the European Network on Debt and Development, which is a network of civil society organisations, 49 of them working on economic justice. And then Gerhard Hümer is the Director of Economic and Fiscal Policy at SME United, which is an association of crafts and SMEs in Europe with 70 member organisations, I believe it is. So also a very large organisation, and great to have you all with us today. I think probably the best place to start really is with the question we asked the audience earlier on, which is this question of what concrete measures now could be taken to allow taxation to do more to support European growth in this terrible period of recession and downturn. Benjamin Angel, could I ask you to start with your thoughts? What is the Commission's priorities, when it comes to this?
I think we need business-friendly systems that support growth and investment, and we need also fair taxation. I park for taxation for the time being because I'm sure we'll come back on it in a greater level of detail. More business-friendly. I think we're very tuned with the answers that we just got from our public. We need a simple system. Today, the compliance costs for SMEs are equivalent to 30% of the taxes paid. 30%. That is huge, and this is highly inefficient. Simplicity is good, but being simple is a very complex task for tax administration. Tax codes today are a goldmine for tax advisor, but a headache for small and medium company. So we need some kind of aspirin measures that take out part of the headache. The Commission is trying to push for a simplification agenda. We have, for instance, a proposal on single EU VAT registration that will allow to sell goods or provide services anywhere in the EU with one registration. A VAT one-stop shop, for instance, which will allow to report all business-to-consumer transactions in the EU via a single VAT statement in the member state of establishment. We're also working on topics which are a bit more technical in essence, but quite important, which is cooperative compliance. So what is it? For multinational, it's allowing the tax administration to engage upfront in a cooperative and positive way with the multinational to try to understand it better. There are some large companies which are frauding, but actually the vast majority of companies, they want to do the right thing. We can help them, and this process allows then a simple interaction in the future between the tax administration and the company, because they got much more confidence on the way it was handling its tax requirement. For SMEs, we are working together with member states on something a little bit different in nature, because the size calls for different action. The SMEs which are operating in the internal market, most of the time, they have major difficulty in understanding what they need to do to comply with the tax requirement of another country. So the idea is to have in each country a single one-stop place where they can ask all their tax questions when they have an activity in another country, and this place will look for the answer. We need also to be investment friendly. That's a priority and a very difficult one. There we have many ramifications on which we are working. There are some which were already announced, for instance, facilitating tax relief. Today, in some country, when you need to get tax relief, it takes ages before it's being effectively paid. So we need somehow to move to a system where you can have a withholding approach to tax relief. We need also to tackle the bias between debt and equity. It's not so easy. It's a long-standing issue, but it's still there. And obviously, we want taxation to contribute to the ambitious Green Deal pushed forward by our president. And we will have the occasion next year with a revision of the Energy Taxation Directive on top of the Carbon Border Adjustment Mechanism, which was explained in the previous panel.
Tove, give us your sense of where you would really be pushing, in not only those priorities, but any others that your organisation is most interested in.
Yeah, thank you. I think first on the question, the focus is very much in the question on how do we ensure that we get growth back. And I think the first important thing to say is that recovery cannot just be about growth. We saw in the last financial crisis there was a very strong government effort to help the banks and bail out the banks, but at the same time ordinary citizens were faced with cuts in funding for healthcare and education. And on the tax perspective, one of the things we saw was that consumption taxes, which is the tax that ordinary consumers pay when they, for example, go to the supermarket, the consumption taxes went up. And at the same time, there was a failure on two fronts. First of all, making big multinational corporations pay their share of taxes. We still saw a very high amount of examples of corporations that pay very, very low rates. We have examples of corporations paying less than 1% in tax. Now, of course, this is not only unfair to the ordinary citizens that are paying their taxes, it's also unfair to the small and medium enterprises that are paying their taxes. And secondly, there was also a failure to really get to the bottom of making sure that wealthy individuals are not hiding their money in tax havens abroad. There was substantial progress in Europe, but more is needed, and especially also at the global level, this remains a huge challenge. And so this goes back to the importance of making sure that we're not just focusing on growth when we're talking about recovery. We also need to focus on citizens and people. And there we need a tax system that is progressive so that we can actually counter some of the inequality that we've seen go up over the last years. We basically need to make sure that inequality starts going down instead of up.
Gerhard, I mean, this question of equality also applies, the level playing field applies between huge multinationals and smaller companies, as Tove referred to. When you talk to members, do you sense real frustration about what they see when it comes to the rates that big multinationals are paying versus what they pay? And obviously these SMEs, the compliance costs are a massive burden, whereas if you're a multinational, it's peanuts, it's trivial.
No, but this is not only now a big problem for most of our SMEs. We discussed this since many years. This is the reason why we are very happy about the action plan for fair and simple taxation, because it tackles exactly the two main problems, the fairness and the simplification. Start with the simplification story. As Benjamin said, 30% of the tax payments are compliance costs. That's a horror for SMEs, and it's really a barrier to start doing cross-border business, because this is so big step, and the costs are in the range of the profit margins. You don't make profit if you go cross-border and have so high compliance costs. This is the one point. The other one is, of course, if you pay significant higher effective tax rates than many multinationals, and nowadays also this problem with the digital platforms, this adds on this frustration. And these are the two areas where we really expect something from the new Commission to push forward or to take again on the table, like common tax base, etc., etc. On the short-term notice, supporting growth, I think the very, very first important measure would be the message to member states here: be careful with taking back the tax referral measures you have done now during the crisis, because the crisis is not over, and if you start now trying to get back the taxes which you have not collected during the first months of the crisis, you will create a lot of problems with SMEs, which are already in very squeezed liquidity and solvency situations. And then we are absolutely not against using the tax policy and the growth strategies to support greening and to support digitalization of our economy, but maybe we can come back to specific measures in a later stage. But for us, of course, we are very, very happy to hear the Commission is tackling the two main problems SMEs have with taxation, the simplification and fairness.
Benjamin, let's take a step back here, and we hear the frustration that smaller businesses experience. Clearly, to address some of these issues, it's a global problem. It requires international action. An individual member state could never individually address this sense of unfairness. When you're dealing with multinationals that can pretty much move themselves where they need to, they can shift profits around the world to lower tax jurisdictions, and so on. And yet, here we are. The OECD process has been going on for quite a long time. We obviously have the BEPS element to that, but there's these two pillars on international taxation, which we heard about in our previous panel. Things seem stuck once again. Perhaps it's because we're leading up to the US election, but certainly on one of those pillars, the digital element, it doesn't seem likely that we're going to get an international agreement on how to tax digital companies. Do you think this is an elusive goal in the end? Do you think that in the EU and internationally, tax fairness can actually be realistically achieved?
Well, first, I would like to remind that a lot has been done already, and we should not underestimate it. In the past term, we had two anti-tax avoidance directives. There's also an extensive network of automatic exchange of tax information, which now involve 100 countries around the world. And that has helped us make considerable progress in fighting tax avoidance and tax evasion. Now, you're right that more needs to be done. More needs to be done to ensure tax transparency. It's a pity that the proposal of the Commission on country-by-country report being made public has not been adopted yet. It was reassuring to hear from Minister Scholz that the presidency was committed to do its best to have it endorsed. And the situation as regard country-by-country report is even more frustrating that the Court of Auditor has recently realized that actually member states make very little use of the information they get from country-by-country report. So on the one hand, you have the public benefit that could stem from having more publicity, putting more pressure on the company to do the right thing, but it's not happening. On the other hand, you have an exchange of reports which is taking place, but no one is using it. So let's try to make more sense into it by making sure that it becomes public. We need also to take more measure to fight tax haven. A lot has been done via the listing process successfully. Since 2017, we have brought via the EU listing process changes in legislation in third country for more than 100 legislation. And that was not to be taken as granted before, and this has a direct impact on our capacity to tackle aggressive tax planning for multinational, because they are the user of those strange tax regimes. We're pushing member states to have more defensive measures towards blacklisted country. Some have not today. These defensive measures can be pretty effective. I will give you an example in the country I know best. In France, when a country is blacklisted, for any financial flow towards that jurisdiction, you have a withholding tax of 75%, which I would assume is rather a level that deters a transaction. We need also to make sure that the companies that get state support do not end up in tax haven. The support does not end up in tax haven. And the Commission has issued a recommendation in this direction last July. Now, as regards the OECD process, it's too soon to judge. We are in a situation, indeed, where things are a bit stalled because of the US presidential election, primarily, where people are waiting and seeing what will happen if and when we have a new US administration. The two pillars are closely connected, and we have member states that like the first pillar, digital taxation, but not so much the second pillar. We have member states that like the second pillar, minimum taxation, but not so much the first pillar. The only way at this stage for us to reconcile everyone is to say we want both. And this is truly our position. We want minimum taxation because this is a good way to prevent the race to the bottom. But we want also an effective taxation of the digital sector. And the Commission has been clear that for both pillars, not only the digital, for both pillars, if there is no OECD agreement next year, we will table new proposal, even if it means that the EU proceeds in isolation.
And is that, do you think, where we're headed?
We cannot judge now. Again, if we have a new administration in the US, maybe the soundbite will be different. No one knows at this stage. I would not assume that it would automatically be the case. I think the reluctance towards digital taxation runs a bit the political spectrum in the United States, to be honest. But we must give them a chance.
Tove, let me refer this issue to you as well, this whole question of international action. Have you been disappointed by what you've seen when it comes to these international efforts, or would you argue actually there have been substantial steps taken, even if things seem frozen, at least on one of the pillars at the moment?
I have to say we have been very disappointed by the developments, because as we see it, and it actually fits well with the theme here, one of the problems we have with the way we tax multinational corporations is that the tax system is close to celebrating its 100th birthday. It's a very, very old and ancient system. And it has cost us hundreds of billions of dollars because it's not working. Multinational corporations are not paying tax. And some of the basic assumptions behind this failed tax systems are very obviously wrong. It, for example, assumes that if a multinational corporation has a subsidiary in one country, that's an independent company from a subsidiary of the same multinational in another country. And this is what allows profits to disappear from the tax radar and into a tax haven. It's because it's assumed that even though the money is still with the same corporation, it's now with a subsidiary that has nothing to do with the subsidiaries of other countries. And this so-called arm's length principle is a very, very fundamental problem. And the OECD negotiations started off with a quite frank discussion about the fact that this system has failed. Then, unfortunately, the negotiations proceeded to discuss how we can maintain the existing system and then develop a new system that applies to some profits, but not all profits, and then try to run two separate systems at one time. We all agree that simplification of the tax system is extremely important, because the loopholes come when the laws and rules get so complex that you can't find your way through them. And right now the negotiations are going in the opposite direction. Same with this minimum effective tax rate. We're also strongly in favor of that. But there's such a complexity. It's unclear which profits would actually be covered. And it seems that the model for the minimum effective tax rate being discussed at the OECD is a rule that the United States has introduced, which is not very effective at all. So we are concerned about the way that the negotiations are going, which means it's actually even more important to look at this issue that the EU can end up having to take the first steps. And I warmly welcome that the Commission is ready to do it if there's no agreement, but we also need to talk about what to do if there's a bad agreement.
Gerhard.
I think as long as our member states or globally, we are dealing with national tax systems and talking about national tax sovereignty, we will end up with systems like we have now, where employers are taxed, real estate is taxed, and SMEs are taxed. And everyone who is able to be mobilized to do cross-border transactions finds way to avoid or to reduce the tax burdens. And this general principle makes it so difficult to find a way out of the system, because Europe has no competence on this, and there are too many which also don't want to have a European competence in this area, which I sometimes doubt or hesitate to understand why, but this the national budget and national tax policy philosophy, which is still quite strong. And this leads exactly to the situations that the progress is there, I agree, and I think the Commission is really doing what they can do under the circumstances, but the progress is rather limited, and I would not be surprised if figures would show that the volume of tax avoidance has increased during the last 10 years and not become flatter. This is also the reason why we also say, especially on the digital taxation, if the OECD is not successful, we would support the European solution. What we have to avoid is another national solution, which creates another layer of complexity in taxation between companies and creates another barrier for the internal market.
We referred quite a lot in our previous panel to the whole question of digital taxes and the whole digital agenda. There's obviously another element to the whole digitization of the world, which is the impact on tax administration and indeed the exchanges of information between the tax authorities. Benjamin, I wonder if you could talk a little bit about the ways in which the Commission thinks that this can actually help when it comes to cracking down on evasion or avoidance, and indeed also the extraordinary costs that we've been hearing about for smaller businesses when it comes to complying. I mean, it's terrible to hear that that tax compliance is actually a barrier to cross-border trade. I mean, this is exactly the last thing you want to hear when you want to actually reduce barriers in the single market.
Absolutely. I think digitalization is both a challenge and opportunity. A challenge for the reason that we were explaining in the previous panel. It's very difficult to tax the digital sector because they can operate without physical presence from one country and serve dozens of others, while traditionally we tax only when there is a physical presence. But it's also, as you rightly put, an opportunity for tax administration because it allows to do things that were not even conceivable before. We don't start from zero. There's already a high number of tax exchanges between administration. We're trying to go one step further. One of you referred to the fact that we have made recently proposal, for instance, on platform. You have a lot of activities that takes place today on platform. When I mean platform, I mean things like Airbnb and the like. And those platforms are a bit of tax black hole for the member state. So what we want to make sure is that the platform transfer every year the full information on the transaction that have taken place so that it will allow member states to tax it as it should. Because tax avoidance and tax fraud is not only about multinational. It's about you and me as well. There's an interesting survey which was done in a large member state 3 years ago. Amid the driver of a large and well-known international platform, which I will not name, and it concluded that more than 90% of the drivers were not declaring their income. Some of them are doing it from time to time, but the vast majority of them is doing it as a job, and that is an unfair tax competition with the ordinary taxi driver. So we need to address the challenge of the digital world at all levels, not only for multinational, but also for the SMEs. Now, for tax administration, it brings a lot of opportunity. One of the risks, naturally, that we face is that the fraudsters use very smart techniques. So we need the tax administration to become smarter than the fraudster. We're still in the learning curve, but some country some country have introduced with some success new approaches. Let me give one example. For instance, Poland. Poland a few years ago had a very large VAT gap, so there's a lot of VATs that it was not receiving. Then they introduced big data, And they have an IT system which is automatically able to identify when there is a missing VAT statement in a VAT chain. And when it gets pretty funny, the system sends automatically an SMS to the person to point that there is a missing VAT statement. Within 2 years, they managed to bring the VAT gap below 10%. Very effective. We have a number of countries, for instance, which are introducing electronic tills everywhere, directly connected to the computers of the finance ministry. There's just no fraud possible. So you can build on the digital sector to reduce very significantly the fraud, but it takes a lot of effort and new approaches from the administration. That's one of the reasons that the Commission planned to organize next year a tax data summit to make sure that we do smart benchmarking and everyone can learn from the good practices from the others.
Gerhard, I mean, what do your members say? I mean, and also, do you see member states where they're particularly good in terms of reducing these compliance costs? I realise there's part of the issue is cross-border, but also within member states, are you seeing interesting initiatives?
There are two things which are important for us, where digitalization can contribute to make life easier for SMEs. The one is mentioned already by Benjamin. It's in the pipeline is to extend the one-stop shop to all business-to-consumer transfers, because that would mean that I'm sitting in Belgium and I can sell to all countries in Europe and declare all consumers in Europe and declare to my Belgian tax authority. Here, the only problem we see still is that we need more reliable information about the tax rates in other member states. As long as the portals we have provide information, but are not reliable in the sense that if the information is wrong, then the company is still reliable to find out the right information, and there is no system of information when the rate is changed, etc. You cannot check every day what is the rate today in Greece and what in Portugal, etc. This is one complex thing. The other one, which is also very interesting, is we are now going in a direction where we do more and more end-to-end processing in e-invoicing, e-payment, e-accounting, e-bookkeeping, etc. The same technology you could use to do de facto automatic VAT declarations in the future. So this is ideas which really, where digitalization can help to reduce these burdens. And also the single VAT registration, of course, we are in favor of it.
Totally.
Well, I think the discussion about digitalization is indeed very important, as Benjamin mentioned. Suddenly, it has become a lot easier for big multinational corporations to have tax residence in a tax haven and to do business in other countries and keep those things separate. But it's very important that we don't start believing that the problem only relates to big IT giants. We see very aggressive, large-scale corporate tax avoidance in all sorts of sectors. We see it in the clothing industry, the food industry, the extractive industry, and so forth. So it's true that the digital economy has opened up new avenues for corporate tax avoidance, but it is across all the sectors, and therefore it must be tackled in a holistic way. And I think there, one very important thing that Benjamin said, which I also very much welcome, is on public country-by-country reporting. It's basically the question of whether citizens should be allowed to see how much multinational corporations pay in taxes in each country where they do business. We have it in the EU for banks. And one of the things that research has shown is that the incentives to avoid taxes actually is reduced. The banks start paying a bit more when they know that they are being watched. And so this is a huge success that we need to replicate to the rest of the sectors in the EU. And this is exactly the file that Benjamin referred to. But we also have to start talking about the elephant in the room here, and that is the EU member states. We see the Parliament pushing very hard for progress and action. The Commission also very often picks up the ball and puts it in play and puts the big issues on the agenda. But when it gets to the EU member states and the Council, that is where we always see ambitions go down. And we have some EU member states that are, some would call them tax havens, are very aggressive when it comes to international taxation and tax cooperation. So that is the big challenge to overcome at the EU level.
This point is a fascinating one on country-by-country reporting. I want to get on to the issue of tax differentials between member states, to put it mildly. This question of country by country, and you referred earlier, Benjamin, to the idea that if a particular, if it's not actually publicise this information, then it seems that authorities aren't using the information the way they should.
This is what the court told us, at least.
Yeah. So I mean, how important is it as a prize, in a sense, to actually get this fully adopted so that we have across the sectors revealing of all the numbers?
Well, I think it's very important for the reason indicated by Tove. It's nudging on the behaviour of the member state, of the multinational. If you make it transparent, then the likelihood that they behave is much stronger. And I think we need to take further steps, which would help also to implement Pillar 2 by having, for instance, more transparency at company level on the effective taxation rate. That's something we should seriously consider, if only as a useful information to the shareholder. But I would like to stress nevertheless one thing, because I wouldn't like to sound too negative on what has been done, and I will start by a personal anecdote. A long time ago, almost 3 decades, when I was a student in business school, I had a course on tax avoidance. Not on how to avoid it, on how to do it. We have moved from this situation where it was a legitimate area to teach in business school to an intermediate step where it was something morally undesirable, but, not something illegal, and that's it. We have to use the advantages where they are, to a situation where, for instance, as far as the union budget is concerned, tax avoidance is illegal. There is in our financial regulation, a very clear rule that the union budget cannot be used to support a project that would lead to tax avoidance. It's a condition of validity. So I certainly agree with Tove that we are not there yet. There's a lot of things to be done, but we shouldn't underplay also the evolution of those last year. It's evolving in the right direction.
Gerhard.
I would not disagree, but I wouldn't be that optimistic, because from our point of view, or my point of view, is if there is a legal possibility to avoid paying taxes, everyone will do it. And as long as the legislators, the national, the European, or the global rules make it possible and allow it, a CFO would even be working against the interest of the company not to avoid as many tax payments as possible in a legal fare. And if it's in a non-legal base, then there should be legal procedures. But I think we will not solve the problem by applying on moral behavior and these kind of things. The regulators are responsible to close the loopholes. And if it's necessary, we have to close some loopholes around Europe if we cannot, if there's not a possibility to avoid this.
We have had some questions from the audience, and one struck me was about this issue of the CCCTB, the Common Corporate Tax Base. Now, this is a dream, I think it's fair to say, that has not yet materialised in reality, despite many years of attempts by the European Union. Tove, could you explain why it remains something that we hear frequently from member states as being, in a sense, something that could really be a huge step change for the European Union if this ever could be realised?
Yes, this proposal with the horrible name, the CCCTB, is a fundamentally different way of taxing multinational corporations. This is something the European Commission has actually proposed already a decade ago, and we completely agree with the basic principles. The biggest change is to see a multinational corporation as one entity instead of a coalition of independent subsidiaries. This is a complete game changer. So this proposal moves in the right direction, but it brings me back to the point about what happens when good ideas reach the member states at the EU level. Because we have the European Parliament supporting this new system. The proposal came from the Commission to start with, and then it gets stuck at the member state level. And the difficulty is that when the member states discuss tax issues, we're not even allowed to see what our governments are saying on our behalf because the meetings are top secret. We don't see honest minutes. We can't actually see how all the good ideas got pushed off the table, and we can see that nothing's happening. I do agree that there has been changes for the better, but I think it's extremely important that we take a step back and say, okay, we are in an unprecedented global crisis, and international tax dodging is a fundamental part of this crisis, and we need a response that matches the challenges we have. We are nowhere where we need to be, and we're still losing billions of dollars, or euros, if you like, every year, and this is completely unacceptable.
Gerhard, what would it mean for your members, CCCTB? How big a change would it mean?
The first problem we have with CCCTB is that if you introduce a common European tax base, it will only affect a very limited number of our companies. And then you have the question, will it be there only for the big ones, or will also those have to change the system which are not even internationally active? If it's not, then you create two different systems of corporate taxation. And you have for the small ones one corporate tax base and then another one for the other one. If it is a border tax, then the other one has to be smaller. Imagine that the finance minister has to apply higher tax rates for SMEs than for multinationals. It's a politically difficult system. This is the one problem. In principle, we would be very much in favor of a common tax base because it would reduce a lot of compliance costs, would it make it much easier to do cross-border business, and it also contributes to create more fairness. We had a problem with the last proposal from the Commission because the Commission made a super deduction for R&D spending. SMEs, which are very active in R&D, don't make profit. This is not for us. This is only for big companies which have already a lot of profit and can deduct a lot when they spend R&D. And for us, this didn't make much sense. So this was, our members was quite hesitating, but we would welcome another initiative from the Commission side. And the last point I want to put is, if you go into consolidation, that means you have a bias between Western and Eastern Europe. And so the reason why Eastern Europe was not so much supporting members, finance ministers, the idea is that if you do consolidation, then they lose tax base to the Western countries where the investors sitting, they have invested in Eastern Europe. So this is the logic behind why member states, for different reasons. Ireland is afraid of different things, Cyprus is afraid of different things, Eastern Europe is afraid about this. And this makes it so complicated to make progress, and maybe I do it too long, this business, so I'm not very optimistic that in my business life I will see it.
Benjamin, do you think in your career you'll see the CCTB ever materialize in reality? Or?
Well, I think it's fair to say that if we had a qualified majority system of the ordinary legislative procedures, the EU legislative framework would be quite different from what it is today. On most of our proposals, if not all, we have a qualified majority. But we have major difficulty to rally a few states which are reluctant, and that make large projects such as the CCCTB particularly challenging. For the time being, there is not much progress on this front. Sometimes the presidency re-kickstart working group, and then working group stops again. We are trying to assess whether there are part of the CCCTB that we could slice and present as an autonomous proposal, so as to avoid a completely binary situation where we have either the CCCTB or nothing. Maybe are there some technical area, admittedly, where the discussion was sufficiently advanced with member state to be able to table some proposal, but we're still working on it.
What would happen if Germany and France agree to introduce a common tax base and motivate or force their trading partners around Benelux, etc., Austria, to do the same?
That's a question you should have asked to Minister Scholz.
Mea culpa, I should have asked, clearly should have asked that question. Yeah. But I mean, this whole question of the need for unanimity when it comes to tax policy is obviously an important one. In the July proposals or communication from the Commission, there was talk about ways of addressing this need for unanimity, including by use of Article 116 of the treaty. Could you give us a sense of where work on that could go?
Well, it's work in progress, but I would just want to use the opportunity to clarify a misunderstanding. Article 116 does not allow to do harmonization via the back door. So it's not that magically there will be an article on which we could adopt all EU legislation in our ordinary legislative procedure. I'm tempted to add, unfortunately. It's an article that just allows us to address some distortion to the employment market stemming from practices in some member states. So in that respect, we are exploring, as announced by the Commission in its various documents, the possible use of this article. But it is not, as sometimes presented, the way to circumvent unanimity. Unanimity is there, and until we have a treaty change, it will remain the biggest obstacle on the road to a better and smoother European tax system.
I'd like to invite you all to give your closing thoughts, and I think maybe one way of framing that issue is with what Tove referred to as the elephant in the room, which is obviously we talk a lot about tax havens around the world, but there are big differentials between member states as well. What particular measures would you prioritise when it comes to addressing this unlevel playing field? What do you think would be achievable and really substantial when it comes to addressing the sense of an unfair or unlevel playing field between the member states? And any other thoughts you had on the broader agenda we've been discussing today, I'd be interested to hear as well. Perhaps, Tove, could we start with you?
Sure. Absolutely top of the list is public country-by-country reporting.
Okay, right.
And there we don't even need unanimity. It's been a long discussion, but we do not need unanimity to have that adopted. So full speed, let's get that done. On the unanimity requirements, there's two problems. One is that it only takes one country to block. But there's also a problem that we're not seeing a strong coalition of progressive member states really put the pressure on the blockers. And part of this problem is related to the fact that the meetings are secret, there's no public pressure for them to move forward. And that is my last comment, is on this EU blacklist of tax havens. There is a very famous rule that no EU country can ever be blacklisted as a tax haven by the EU. That basically means that the EU member states cannot talk about the biggest problems we have in the Union. When it comes to the reasons why corporate tax money is leaving EU member states, the problem is not in some small island in the middle of the ocean. The problem is right next door in the EU neighboring member states. And so the EU needs a way to start dealing with its problems. Public country-by-country reporting is a great way to let us see what's going on, but then we also need to be able to see how the member states are discussing this issue, and we're missing a progressive force. So all member states have homework to do, also the ones that are not tax havens.
Gerhard.
Starting with Tove's last comment, I think as long finance ministers design their policy only by calculating what it costs them and what it brings them to do any change, we will go nowhere here. So I'm not very optimistic that there can be a lot of progress as regards fairness as long as we have the same, like the governance framework, the same treaty, etc., etc. For us, a very important point, but you have mentioned it already, is this mandatory reporting of platforms about the clients. But please in a way that it is not too harmful for small businesses using platforms. Yeah? It's enough if you get the name, the tax number, and maybe the turnover from last year. Another point is where we have huge unfairness, and even our members see there are more problems than in the digital multinationals because they are living in different worlds, is the problem with undeclared work. You have, in regional level, local services provided with undeclared work, where de facto you save the VAT rate and also some social contributions. This is a huge effect in the construction sector, in many local businesses. Here should be done more. Not the Commission. The Commission has, at the European level, we have a regulation where this can be done, but member states are not implementing this properly. And here we get now to an additional layer, because if we want to improve and to strengthen the circular economy, also the tax treatment of repair work should be considered. And I think it would be an interesting approach to say, why not allowing a reduced VAT rate on repair work? Is it for cell phones? Is it for washing machines, etc., to get here a trigger to buy more long-lasting products and to make it cheaper to repair instead of buying something new. These are the most important proposals which we have now trying to put forward in the digital and greening this debate.
Benjamin. I would mention 3 areas. First one is transparency, because transparency is guiding good behavior. If you make it transparent, then many companies would behave naturally. The second one is not very original, but I'm still a priority. It's taxing the digital sector. The digital sector is faring very well during this crisis. And that makes finding an appropriate solution even more urgent than it was before. And we are fully committed to come up with a proposal if the OECD does not deliver. And the third priority is minimum taxation. But I would say not only at the OECD level. We have this international discussion on minimum taxation to prevent a race to the bottom. But surprisingly, we see sometimes race to the bottom happening in many areas. For instance, we have seen in some member states last year a race to the bottom on excise duty on alcohol, and each time a member state was reducing his rate, suddenly the customer from the neighboring country were joining, and that forced the country to reduce its rate. That is not very good for health consideration. So we need some kind of benchmark of good behavior agreed internationally that avoid excesses.
Great note to end things on. I wanted to thank my panel here for a fascinating discussion. First of all, Tove Maria Riding, Gerhard Hümer, also Benjamin Angel, for your excellent contributions. The issues that we're discussing here are of immense importance. I think we could all agree on that. Public finances are under massive pressure because of this downturn. There'll be a need to pay this money back through tax systems. That means the tax systems need to be perceived as fair. So this agenda doesn't stop here. It's going to be a huge one for Europe and the world in the years to come. Thank you all very much indeed for joining us, and thank you all to my panel.
Thank you.